Welcome back. Cement stocks are on fire this morning. Shree Cement, the one which will exit the Nifty come September end, is now up 6%, and we have Ultratech Cement up around 3.5% as well. But the Murugappa Group down south has re-entered the EV business 14 years after the Chennai-based conglomerate first launched their electric scooters way back in 2008. The group company, Tube Investments, has now launched an electric three-wheeler under an all-new brand. The electric three-wheelers will be made by Tube Investments Clean Mobility, which is a subsidiary of the company, and will be sold under the brand name Montra Electric with a price range between 3.06 lakhs onwards. TII Clean Mobility's launch pipeline will comprise electric three-wheelers, tractors and trucks. In a rare exclusive, CNBC-TV18's Jude Sanith spoke with Tube Investment of India's chairman Arun Murugappan and CNBC-TV18 of TII Clean Mobility.
2008 it was where we went to electric scooters, and I think we were a little too early for the market itself. Yeah, and coming to it now after so many years, I mean, electric is the way forward, and we intend to go we form this platform called TI Clean Mobility, and we probably have different platforms, starting with the three-wheeler, the tractor, and then the truck. Yeah, so the first move, I mean, what I'm saying is like 2008 was a bit too early for us to do it. And now we're not getting into two-wheelers anymore because it's just too crowded a market to be in. So we will be in segments that will be productive segments like Ford said.
Right. I have to ask you then, what are the major learnings, Mr. Paul, that you think you can bring into this space really, considering it's less crowded, you will have a first mover advantage. You said you aim to be either one or two in the next couple of years. So what are the learnings and how do you plan on getting there?
I think the learnings are in terms of being fast to adopt. Number one, look at all the different solutions that are evolving. You know, variabilizing the cost to the customer in a large way so that you provide those unique solutions. And therefore what happens then is adoption becomes far higher for us and for the industry as a whole. And then we stand to gain there, having the first mover advantage.
Right. So cards on the table then, what is the kind of investment you're looking at as far as this space is concerned, this foray, and what kind of production capacities do you have and where do you go from here?
Yeah, so the initial outlay, we've put about 200 crores in this project, and our capacity today is about 75,000 units per year. Yeah? And any further capacity that when the time comes, we will invest and then go forward. Yeah.
But you know, even as you contend with this space, there are some major global challenges that persist. For instance, the semiconductor issue. It's there's been talk that it could slow down EV production, as is Chinese control of lithium reserves and processing. Are these potential risks to your scale-up plans going forward, and how much will it impact you?
I think the risk mitigation plans are being drawn up, because on the semiconductor thing, we've got into strategic tie-up. Even with battery, we have got into strategic tie-up, looking at the volumes that we will have and a tie-up. The other thing also is that, you know, the battery chemistries will slowly evolve away from rare earth materials to materials that are freely available. And the leading energy players will actually reposition this energy space that will make it far more easier to OEM manufacturers for adoption of battery technology and getting away from this crisis of, you know, availability of materials actually.
So in that case, do you feel there's just been too much being read into the availability of lithium and in terms of the semiconductor issue as well? Or do you feel that things are kind of balanced where we are today?
See, today the things are stabilizing a little. You know, albeit with the war in Ukraine and all that, things became a little worse for semiconductors. But things are easing out a lot more as we see today. And, you know, in the next 2 years at least, you know, there are different battery chemistries that are evolving with the larger energy players. That will make the adoption much more easier, and that will make, you know, the whole equation in the battery space, you know, different from lithium specific only. It's going to be LFP, it's going to be hydrogen, it's going to be different other technologies that are going to help.
Well, the markets have slipped a little bit. We're still down close to 100 points, but we have run out of time on Chartbusters. You stay with us. Trading Hour comes up next.